But the S&P 500 is hovering near record highs, but the little guys really haven't been coming along for the ride. Small caps down nearly 10% from their 52-week highs. But let's now take a look at the chart of the day that Jeff Mills of PNC brought along. And Jeff, you say something good may start to be bubbling up for the Russell 2000. What are you seeing?
Yeah, I think there could be, and I'll get to the details of the chart in a second. But one of the questions we get from advisors, clients all the time is, look at this divergence between small and large. Is this telling us something about the sustainability of the rally? And it could be problematic. There could be bearish implications because small caps are not keeping up. S&P at all-time highs, small caps more than 10% away from their own all-time highs. This has only happened 3 times in the past 40 years. So we went back and took a look at, well, what happened during those 3 periods. It's not necessarily a robust sample size, but what we saw in every one of those periods was small caps eventually catch up and make their own all-time highs. So again, not a huge sample size, but it gives us an idea of what might happen in this environment. And like I mentioned credit spreads before, they still look pretty good. You have money supply accelerating, so I don't think small caps lagging is necessarily a commentary that there's risk aversion in the market and that the S&P can't sustain its highs. I think it actually may be more of a commentary on the fact that banks, for example, are the largest industry group by far in the Russell. So there may just be an individual industry group problem there. You go to the chart. So the Russell hasn't made much progress toward all-time highs. It's been trading in this channel. What you're seeing under the surface, though, is the new 20-day high list, so new 1-month highs starting to expand. You're now crossing that 35% threshold there. So 35% of issues in the Russell are now making 1-month highs. This is generally a good thing when you look at the returns in the Russell over the next 6 to 12 months. So if history is any guide, if this internal expansion we're seeing within the index is any guide, we could see a catch-up in small caps over the next number of months.
Well, because the gap, Jeff, between the small caps and the S&P 500, I don't know if it's never been wider, but it's really wide in terms of the performance over the last year or so. They're just doing this.
That's exactly right. And I think a lot of it has to do with the interest rate environment we've been in and what's happening to banks. So I think that's been a big driver. And again, I don't know it's a commentary on the broader market. But to your point, it's only happened 3 times. It's very, very unusual for the gap to be this wide. But history tells us that there is usually a catch-up trade to be had. And I like what's happening under the surface as it relates to the broadening out of participation.